Hey everybody, Brian Shannon here from alphatrends.net. It is Friday, the 22nd of May, 2015, and the market's closed for the long weekend. So let's take a look at the numbers here. The S&P 500 gained about 0.25%. The NASDAQ tripled that with a 0.81%. Semiconductors led the way there once again. And the financials were strong, so they have a decent, they're up 0.5% year to date now, which is nice. And we had a little bit of profit taking in the Dow and in oil here. So let's take a look at the levels that we have that are important for the S&P 500. Obviously, we are at all-time highs. That is, as of yesterday's close. But right now, we broke out this week, and this is our more important band of support that we're going to want to see hold. Really, 211.50 up to about 212 is that key band of what should be support here. So if we pull back a little bit down towards that level, I wouldn't view it as anything negative other than just a pullback. We do have this market riding the rising 5-day moving average, and it's kind of stalling out here a little bit. Obviously, today's volume was real light due to the holiday, and over the last couple of days, it's dried up a little bit. But we have a very strong market here, and if you're going to fight the trend, it is obviously not the best idea here, as the prices are higher highs and higher lows. So this is our more important level for next week. Although first thing next week, I think before that about 212.50. If we break below 212.50, that will turn the intermediate term a little bit more neutral. And if we break down and get below this level, well, then we've got more to think about. But for now, again, the primary trend is higher, so it's innocent until proven guilty. And same goes true, of course, for the NASDAQ, which had a decent week here, again up close to a percentage point, and clearly still in a phenomenal uptrend here. Nothing to suggest that it's going to reverse. We've seen that since we spoke about the break of this trend line, and we saw the higher high with a higher low above the flat to rising 5-day moving average, that the buyers were in control and innocent until proven guilty. I never tell people what to do in the market. That's not my thing. I never tell anyone what to do because we have different time frames, we have different agendas. But I speak about the market from an intermediate term standpoint, and I leave it up to you to figure out what to do with that information. When I say it's innocent until proven guilty, basically I mean it's okay to be long as the higher highs and higher lows continue to hold, and then you implement that any way that you choose to do so. But right now, I think the more important band of support for the NASDAQ is really 109 to 109.50. If we break below that 5-day moving average, it'll turn it a little bit more neutral on the intermediate term, but still a very solid market here. And the Russell 2000 made some nice progress this week as well, as it did get back above that 50-day moving average and this prior band of support, which was holding as resistance right in the 123.5 to 124 level. So it's actually good that it broke out and ran just a little bit and pulled back. To me, it means that it's building energy there. It's testing the break level, and that we now want to see this hold as support. As long as we hold above this 124 level, we are at least neutral. And then turning back up once again through these highs, it seems to me as though there's no reason to think that the Russell 2000 can't continue up to record highs as well. The semiconductors had a good week also. They've broken out recently beyond that 57 level, 57 to 57 and a quarter, and this market continues to chug higher with higher highs and higher lows above a rising 5-day moving average. So the key level that we want to see hold next week would be 57 to 57 and a quarter. If we can continue to hold above this level, we're at least intermediate term neutral. Breaking below that would change the dynamics a little bit, so we would have to reevaluate. And this is what I talk about every single day for subscribers at Alpha Trends. The bronze subscription is less than $200 a year, and it's a end-of-day video with these same indices every day. So the financials also, we know that are now up 0.5% year to date. They did break the highs from January, not up to the highs from last year yet, still falling a little bit short of that, but we can see a nice pattern where they're stair-stepping higher with prior resistance holding as support as we get this stair-step higher. So drilling down down to a 30-minute time frame, you can see here it's been a little bit choppy, but the pattern is still existent that we have higher highs and higher lows with a rising 5-day moving average. Early next week, we'll want to see this hold as our band of support, basically 24.75 to 24.85. If it breaks below that, then we become a little bit more neutral to maybe even intermediate term bearish. It wouldn't mean that you should take any type of bearish positions for anything more than shorter term time frames, though, because we're solidly higher with advancing 10, 20, 50, 100, 150, 200-day moving averages. That's just not a fertile environment for shorting into. Shares of Apple had a better week than I expected them to have. These lines on here where I was telling subscribers that if you're buying above this resistance here, that your stop should be now, I think, worst case stop for an intermediate term trader about 131. And when we look at the 30-minute, actually let's look at the 130. Well, we'll go to a daily time frame. The daily time frame is actually kind of looking like a cup on a handle, and I know a lot of people get excited about that. I would say be careful about buying a break beyond there if it occurs next week. You have to ask yourself, where has a move come from and where does it have the potential to go? So in other words, because this is where the buyers took control of the intermediate term time frame, if it breaks beyond that 134.5, let's just call it level, then it will have already just rallied basically 7 points to get to that breakout level. And to me, that says the risk of a pullback is greater. That is, if we get beyond that level, I wouldn't be surprised to see it maybe run up towards 135 and then begin a pullback that lasts a couple days. You can't just buy a breakout. You have to say, where has it first come from? The TLT, the 20-year bonds, I pointed this out on StockTwits and on Alpha Trends, that the in December of 2013, if we take a look at the weekly chart, from this low right here. So since that big, powerful up move began, it was basically January 1st of 2014. This shows that same time period, and what we see here is this is the volume weighted average price. So since that event, since the volume weighted average, since that upward move began, the volume weighted average price is right here, and that's a level that did in fact provide a little bit of support in here this week. However, if you look at it, we're still clearly in a downtrend, lower highs and lower lows. So don't be looking at this market and thinking that, hey, it's a great turnaround just because it was at this volume weighted average price. The volume weighted average price since that event is an important reference point. It's a marker to kind of judge who's in control. But with a pattern of lower highs and lower lows, there's still no advantage to being long in here. And again, take a look at the direction of the 5-day moving average. And when we see these rallies that occur with a declining 5-day moving average, they most typically do fail the way they have for the TLT. So I think that you've still got some work to be done in here. We've got a declining 10, 20, 50, 100-day moving average, etc. So if you're going to be looking to trade a bounce in there, I would suggest you do so only for the most nimble of traders. Alibaba, we saw a couple weeks ago that earnings report got it going, and I've been hating on this the whole way down, and I said this changes things. This gap changes things. We had seen that the stock was struggling a little bit with the year-to-date volume-weighted average price, and then this week it broke beyond the little consolidation high, and here's where we are now. We're just below the volume-weighted average price since the IPO. So the average price since this company began traded publicly is about 95.5, and this is a potential level for resistance. It's a level to be aware of. So it's not that it will become resistance, but again, where has it come from? Just in the last couple weeks, it's gone from 86 to 95. So it's getting a little bit extended in here. You don't want to be chasing strength. That's one of the biggest mistakes I see people do, is to chase a stock, and now's not the time to be buying. Let this stock settle back down before you do consider a potential purchase candidate. I think that eBay is one that's worth keeping an eye on. eBay, of course, is up near the all-time highs. It looks like it should be breaking out. They, of course, are spinning out PayPal soon. I did, recommend this as one for subscribers to Alpha Trends. We saw that this week, we saw that, the stock was rallying here a little bit coming into the beginning of the week, and then it had a shakeout here. And that shakeout, that which doesn't kill it only makes it stronger. So now we're back above the rising 5-day moving average, and we have the higher highs. So I would say keep an eye on this one. There's the potential catalyst of the PayPal spinoff coming that might get this stock running nicely. So that's a good one to keep an eye on. I'd also say maybe keep an eye on Sohu. Some of the Chinese names have been strong. And you look at Sohu, it's had a nice run in the last couple months here that, from the March lows, it ran up from 50 to 70. And now it's just been digesting these gains. The good news is the digestion, the absorption of these gains has come really more through time in a tight range rather than a steep price pullback, which might have taken it, let's say, to the 50-day moving average, and then this would have been, a scenario for the stock. But instead, right now, we're seeing that the stock is turning sideways. While it's in this range, it's a complete waste of time unless you're actually, looking to scalp within the ranges. But this is going to be the more important area of resistance up near about 69 to 69 and a quarter. This is basically your band of resistance, and you can see here we've got a declining 5-day moving average, and early on in the week, if you're looking to maybe take an early entry on partial position, perhaps you get involved in a little bit right here with a stop underneath the most recent relevant higher low, and then see how it behaves and how it gets to that bigger 69 to 69 and a quarter level to see if that is something that makes sense. I've got a class coming up in a week and a half that goes over all these principles. It is an 8-hour class taught on a Tuesday and Thursday, 2 Tuesdays and Thursdays, and then the final class is 2 hours, and that's a Tuesday evening. So they are 6:30 to 8 p.m. Eastern Time, and you can learn about it on the alphatrends.net website. Thanks for tuning in. I hope you had a good week.